Welcome to the Hurst Trading Room. This is a video update for the 20th of January 2014, and it gives me great pleasure to be back recording videos for the Hurst Trading Room. We have been very busy developing Hurst Signals to incorporate the FLD Trading Strategy, and it is really very exciting to finally be able to release Hurst Signals and make it available. It enables traders around the world to benefit from the very powerful cyclic principles of J.M. Hurst combined with the very effective FLD trading strategy without the need to install Sentient Trader, learn how to use the software and obtain a data feed. Now everything is available to you through Hurst Signals, so we are really very excited to bring Hurst Signals to you. And in these Hurst Trading Room videos, I'm going to be identifying trading opportunities using Hurst Signals. I'll be looking at charts in Hurst Signals, and I will also occasionally refer to Sentient Trader and look at analyses in Sentient Trader in order to bring together the information from Hurst Signals and from Sentient Trader, of course. Before we move on and take a look at the markets today, please make sure that you have understood these disclaimers. In today's video, as we get back into our analysis of the markets and identification of trading opportunities, I'm going to be taking a look at two instruments, and I'm going to start with a consideration of the euro to US dollar, because we have a trading opportunity which is approaching in the euro to US dollar. So let's consider it. First of all, here is the overview chart for the euro to US dollar. And we can see some very clear cycle shapes. It's one of the reasons that I enjoy trading the euro to US dollar. You can see that according to this analysis, the 40-week cycle trough has been placed over there in July of 2013. Personally, I think that a better placement for it might in fact be in April. But in fact, whether that trough is placed in April or in July, I very much agree with the fact that the most recent 20-week cycle trough is over here in November of 2013. And so I'm very happy to work with this analysis. Let's quickly take a look at some of the cycle shapes, because that is very important to me when I'm considering entering into a trade. And so here we can see some fairly good clear cycle shapes. There's a little bit of noise around that area over there, but nevertheless we see a good clear M shape there, and more importantly the recent cycle shapes have been good and clear, and here you can see a very good bullish 20-week M-shaped cycle. And what has happened since then is that the euro has come back up again to roughly an equal peak over there, and then has been coming down again. So what is it coming down to at the moment, or what cycle trough is it approaching? And if we have a look down here, we can see that it is approaching an 80-day cycle trough. That's the nest of lows for the 80-day cycle trough. And following that, of course, we expect it to bounce up a little bit and then come down into the expected 18-month cycle trough, which is going to be occurring in a few months, in 2 or 3 months probably. And so that's the background to this trading opportunity. Let's take a look at the 3-month chart for the euro to US dollar and start considering the identification of the interaction between price and FLD. And here you can see that the most recent 20-week cycle trough is over here in early November. And we've got a very, very good, clear sequence of interactions between price and the FLD. Here is the A category interaction, and that's over there. It occurred in price over there. Of course, these interactions are labeled above the bar on which the interaction occurs. And so some interactions, as you know, take place over several bars when price tracks along an FLD, in which case the interaction is labeled at the initial point of interaction. That's just a small detail. The B category interactions over here as price came back down to the FLD, and the C category interaction as price breaks back up away from the FLD. Here's the D category interaction as price crossed down below the FLD as it came down towards the 40-day cycle trough. You can see there is the 40-day cycle trough, which has, as a matter of interest, been pinned there. That's because the default analysis that Sentient Trader was performing wasn't placing that 40-day cycle trough over there, but that, according to the team who manage Hurst Signals, is probably the best position for the 40-day cycle trough, and certainly looking at it, it looks like a very good position to me. And here is the E category interaction as price crossed back up above the FLD. F category interaction, good, really typical F category interaction with price coming down very strongly below that FLD. Then, of course, price bounced back up to the FLD, crossed slightly above it just for a day or two. That's the G category interaction, and then of course it dropped down below the FLD in an H category interaction. That therefore completes our sequence of 8 interactions. And so our next interaction is as price bounces out of this 80-day cycle trough, which is expected round about now. As price bounces out of that 80-day cycle trough, we're looking at an A category interaction next, and you can read all about that A category long entry trading opportunity over there at the top of the chart. So this looks very good to me, and we can draw some cycle shapes. I really always look at the cycle shapes. So this is the M shape of the current 80-day cycle, and you can see that it is a slightly bullish shape, of course, and that 80-day cycle trough is expected now. So we should be standing by to enter into our A category long trade. There's a useful bar count here on the chart, 74 bars. So there have been 74 bars since the most recent 80-day cycle trough in the beginning of November. Now the average length of an 80-day cycle is in fact 68 days, as you should know. And so the cycle has already been running about 6 days long, almost a week long. And you can see here at the right-hand side of the chart that the 80-day cycle, the recent average, which is this number over here, is 76.8 days. So everything's really falling into place in terms of this 80-day cycle trough is expected quite soon. And so I think that this looks like a really good trading opportunity. Let's take a look at the 6-week view, which gives us just a bit more detail. Here we can see that detail, and there is the 40-day cycle trough. Interestingly, that one's not pinned. That's because recently the analysis has probably shifted slightly, and it hasn't been necessary to pin that trough over there. So that gives me an increased confidence, because actually I trust Sentient Trader's default analysis. I think it performs a very good default analysis. Here we can see in closer detail the D category interaction as price came down over there towards the 40-day cycle trough over there. The E category interaction, this extraordinary bar, which went up so high and then came down again, of course. And here's the F category interaction, good clean interaction. G category interaction as price broke up above the FLD. H category interaction as it came down below it again. And we're standing by to enter into an A category long trade, as you can see in the trading information over there. Now, there have been 31 bars since the most recent 40-day cycle, so that's another useful bar count. The average length of a 40-day cycle is 34 bars, so we would be expecting, if this was going to be a perfectly average length cycle, we would be expecting that trough to form in about 3 days' time, so sometime later this week. I don't know if you can see this here. It's a fairly dark color blue, but there have in fact been 36 bars to the recent average length of a 40-day cycle. So if this is going to be a typical recent cycle, then the trough would form in about 5 days' time. So certainly the time is ripe for that trough to form, and then we would take advantage of the trading opportunity by entering into a long A category trade. Now, there is a warning here which you should bear in mind. It indicates caution. This trade might be premature. Now, why is that? Well, what happens is that after price breaks down below an FLD, as has happened here, and in fact, price broke down only on Friday of last week, what will often happen is that price bounces back within the few days immediately following that interaction. And you've got to be careful of jumping into a trade too early, because very often a price will pull back to that FLD, and so that's something we need to be a little bit careful of. I wouldn't be entering my entry orders into my trading platform just yet because of that. This trade might be premature. The other thing that we have to be very wary of whenever you're entering any trade is you consider what is the alternative, or what else could be happening here. And you should know that, of course, there is always the danger that we witness a double GH. Now, I don't always expect a double GH, and I only usually expect to see a double GH when price is moving down into a much greater magnitude trough. So when price moves down into an 80-day cycle trough, I don't expect to see a double GH. If it's moving down into an 18-month cycle trough, then I would in fact expect to see a double GH. So I'm not expecting a double GH, but we need to keep at the back of our minds that danger. And you can in fact see here in brackets, the Hurst Signals system has indicated, beware a double GH. Okay, because it is a possibility that we will see the formation of a double GH. So what is the summary in terms of this trading opportunity? I think it is a good trading opportunity. I am standing by to enter into an A category trade. I'm not going to enter my orders today because there's a bit of leeway there. I'm a little worried that price might pull right back up to that FLD, which is something it often does. I'm going to watch price, and if it starts approaching that FLD and starts behaving with any kind of indication that that FLD is going to provide resistance, then I will step back from the trade. But if price looks as if though it is forming a good clean 80-day cycle trough and starts moving up with supporting volume and some good clean strong bars moving up towards that FLD, then indeed I will enter into this A category trading opportunity. The other instrument that I want to discuss in today's video is the NASDAQ 100, where we also have a trading opportunity. So let's take a look at the overview chart and have a look at what's been happening in the NASDAQ recently. And this is a really fairly extraordinary chart. All the US markets are looking very much like this at the moment. Look at the way in which price has simply accelerated to the upside. Now, I don't know if it's just me or whether all cyclic analysts tend to be contrarianists, but when I see a market accelerating to the upside, I immediately ask myself, when's it going to turn down? Because I think it's going to have to start turning down fairly soon. I'm not saying it's definitely turning down now, but we have a short trading opportunity in the NASDAQ, and I'm interested in it, which is why I'm going to discuss it in this video. Now, let's speak a little bit more about this overview. One of the big problems with a market when it gets distorted by a dominant cycle, which is what's been happening here, and that's why we've had this very straight line move up, is because of a longer cycle, a dominant cycle, just really distorting the price movement. One of the problems with that is it becomes very difficult to identify troughs. You can see that during this period over here, we had some nice, good, clean troughs, okay? That's a good clean trough. That's a good trough. That's a good trough over there. So we had good troughs over there. There's a fairly good one over here. And after that, there are very few troughs to really pin our cycle troughs, our diamonds onto. And so the first thing to realize about this is that an analysis of this instrument is likely to be something we need to consider with some caution, because there are some difficulties in really identifying these troughs. Now, the other thing that is worth mentioning is that according to this analysis, there is a 4.5-year cycle trough here in July of 2013. And many people will look at that and they'll immediately start wanting to debate whether that should be a 4.5-year cycle. Now, I tend to take 4.5-year cycle troughs with a pinch of salt. I don't worry too much about them. What I think is important is that that was very probably a trough of the 18-month cycle, this yellow cycle over here. Whether it was a trough of the 4.5-year cycle could be debated. I have big reservations about that. I think possibly the 4.5-year cycle trough should have been back here in 2011 rather than in July of 2013. But in terms of trading the FLD trading strategy, that's an academic discussion. We work out our underlying trend up to the 18-month cycle, and what the 4.5-year cycle is doing is not really that important. And so I'm not going to launch into a big discussion about whether that should really be the 4.5-year cycle. It's the kind of thing I do enjoy discussing, of course, and considering, but I'm not terribly worried about that in terms of identifying this trading opportunity. So I'm going to rather focus on the 18-month cycles and not worry about whether that is in fact a trough of the 4.5-year cycle. So let's look at these 18-month cycles, and we had a good M shape here, okay, for the 40-week cycle, and then we had really rather a sort of a squashed, distorted cycle. Clearly longer cycles were coming in and stretching the market and pushing it, so that caused a very distorted M shape to the upside. That was coming into the July trough in 2013, or perhaps it was late June, I think, June of 2013. But nevertheless, I think that this trough here is a good trough for the 18-month cycle. It looks good to me. Since then, there have been really very few troughs to pin our diamonds onto. The obvious and clear one is this trough over here, which has been marked as a trough of the 20-week cycle. As you can see, it was in October of 2013, if I'm reading that scale correctly, and that looks like a very good position for the 20-week cycle trough. So this looks fairly good to me. I think that a 20-week cycle trough in October of 2013 looks good, which means that there must have been an 80-day cycle trough since then, and you can see that the 80-day cycle trough has been positioned later in the year. It looks like December of 2013. Let's take a look at a closer view. Sometimes looking at the overview doesn't really give you much information. I think that what this overview tells me is that the market has been very distorted to the upside recently, and we're considering entering into a short trading opportunity here, and you've got to be very careful when a market has recently been distorted strongly to the upside. It's a bit like stepping in front of a moving train. You don't have a very good chance of stopping that train, and it could be that this market is going to keep moving upwards. So this overview is telling me to be very cautious because the markets have been going up very strongly. And is there any indication that that has changed? Well, on the overview there isn't, but on the shorter term charts I believe there are some clear indications that the upward momentum of the market is waning. It's beginning to fail a little bit, that bullish move upwards, and so therefore a short trading opportunity might be exactly what we need to do. Let's take a look at the 3-month chart, and here you can see the position of the most recent 80-day cycle. over there, which was in the middle of December. Now, I'm not going to start looking at a whole lot of other charts, but I will tell you that I believe that stock markets around the world, in fact, experienced an important trough in the middle of December. If we look at the European markets, look at the Dow Jones, the S&P 500, all of them experienced quite an important trough in the middle of December. In the NASDAQ, that was little more than a little sort of a blip downwards. You know, it was a move down for just over a week, but nevertheless, it is probably a very good position for the 80-day cycle trough. And so I feel good about that. We can see the interaction since that 80-day cycle trough has been labeled on this chart. There is the A category interaction, then B, and then C. But let's jump in straight away to the 6-week view so that we can see that in a little more detail. Okay, so here is that 80-day cycle trough in the middle of December. Here is the A category interaction, and here is the B category interaction, and here's the C. Now, why has the C category interaction been labeled here as opposed to here when the market really pulled away? Again, it's because the interactions are labeled at the moment at which price interacts with the FLD, which is really where the interaction occurs. Sometimes an interaction takes several bars to resolve, as was the case here. The interaction occurred at that point there. Then price tracked along the FLD and still tracked along the FLD, and only finally broke away over here last week on Tuesday, I think. No, Wednesday, in fact, it finally broke away from the FLD. Okay, so those are the interactions. They look good to me. We expect price to track along the FLD between B and C. In fact, what happened here was it tracked along during the C category interaction. So that's not ideal, but B and C category interactions should happen round about the 20-day cycle trough, and that is indeed exactly what seems to happen, because here is the 20-day cycle trough, very well positioned in my opinion, on the 6th of January 2014. Now, when we looked at the overview, I mentioned that this market has been stretched upwards very strongly, and now we're considering entering into a short trade. As you can see, the trading opportunities presented up at the top of the chart there. It's a D category short entry as price crosses down, because of course our next category interaction is going to be a D category interaction where price crosses down below the FLD, and we're considering a short entry. Now, is there any indication of weakness in this market? Normally I would be reluctant to jump into a short trade when the market just seems to be steaming upwards. In fact, there are several indications of weakness, and I'm going to run through them very quickly here. The first one, let me just clear this chart. The first indication of weakness is this A category interaction. The interaction actually happened here at that level, at about the level of 3,500. Okay, and if we look at our grid lines, this low was over here. So it was about 1 3/4 grid lines from the pivot point up to the A category interaction, and if we go up 1 3/4 grid lines, we get to over here. Okay, and you can work out the exact numbers and so on. I don't get too detailed with this, but this level over here was the target, what of course we call T2, but it's the target for that A category interaction. Now, price only just managed to achieve that target, or perhaps didn't quite, but it's a very close thing. Now, that is a sign of waning bullish momentum. In other words, the bullishness of this market is beginning to dissipate. All right? A category interactions usually exceed their targets. The fact that this interaction did not exceed its target is the first sign that, in fact, the bullishness of this market is beginning to falter a little. All right? It might be a short-lived weakness, but nevertheless there is some weakness showing in this market. The next sign of weakness is the B category interaction. Usually price comes down to the FLD, tracks along the FLD, and then bounces up again. What happened here? Price dropped heavily, okay, down to the 20-day cycle trough over there. And that again is a sign of weakness. Usually the FLD provides support, but in this case price just stormed straight through that FLD and headed downwards, only for a brief period, only for 3 or 4 days, but nevertheless it's a sign of weakness. It's a sign that the bears are beginning to develop a little bit of strength. Now, of course, our short trade in this instrument is not going to be a very long short trade. We're not asking ourselves whether this market is going to fall over a period of several months. All we want to know is whether there is a good chance that this market is going to fall for a period of a week or 2 or perhaps 3. Okay, that's what we would expect out of a D category short interaction. In fact, D category interactions are usually fairly short trades, and so we're looking at the market falling for a week or 2. And certainly there are indications to my mind that this market is vulnerable to a fall of that kind of period. What is the third sign of weakness? The third sign of weakness is in the C category interaction. And let me clear this again so that we can see it a little more clearly. So the C category interaction actually occurred over here as price touched the FLD. Then it tracked along the FLD. And then over here on Monday of last week, price dropped down to a new low. In other words, a new low since the interaction had started. Here was the low prior to the interaction. So it dropped down to a new low. Now when price drops down to a new low while it is tracking along the FLD, that is a sign of weakness, and it indicates that there is increasing selling pressure. The market did manage to finally bounce up above the FLD in a very quick sort of a rush upwards, and we end up with a rather disappointing C category interaction, really. And as a matter of interest, that would have been a very difficult trade to get into. We probably wouldn't have been able to trade the C category trade because we wouldn't have identified an entry level. But nevertheless, it is a further sign of weakness. And so what we expect next is for price to drop down below the FLD, and we will enter into a short D category trade when that happens. Now, today is Martin Luther King Day in the United States, and so there is no trading today. Well, there is some overnight trading, but the general markets aren't open today, and so I will not be entering into a trade today, and I will be very cautious about entering into a trade tomorrow on Tuesday. And then I'm going to watch the markets and see how they unfold. You must bear in mind the reservations that I have about entering into trades following a holiday. And so make sure that you are aware of those issues. Entering into a market on a Monday or following a holiday, you've got to be careful of getting stopped into trades prematurely. Thank you very much for joining me in the Hurst Trading Room. I'm delighted to be bringing you these videos again. If you have not seen our information about Hurst Signals, which we are launching this week, our new Hurst Signals FLD Trading Strategy service, then please go along to our Sentient Trader website and take a look at the information that is presented there. We have some fantastic introductory offers for the month of January, so make sure that you take a look at those, and I do hope that I will be seeing you again in the Hurst Trading Room as we identify profitable trading opportunities in the markets.